talk about the innovations such as AI, blockchain, big data analytics, and cloud computing are not the only one thing, but there are so many other aspects enhancing the security, efficiency. But majorly, they're also creating a robust and a business models that are also creating opportunities. So in a way, the upcoming panel discussion will provide a comprehensive understanding of trend, challenges, key strategies, and opportunities.
Sure, thank you so much, and good afternoon, everyone. We are going to have a panel discussion on emerging technologies, reshaping the future of finance. And I have with me an esteemed panel of experts who are right at the forefront of innovation in financial sector. So I'll like to start with Mr. Kapil Jaiswal. Welcome, sir. So as India aims to become a $5 trillion economy, right, BFSI sector is expected to play a pivotal role to achieve its growth trajectory. So the question to you, sir, is what emerging technologies do these BFSI sector need to leverage in order to achieve this ambitious target? And what are the security concerns and inclusions priorities should be kept in mind?
First, I thank Banking Frontiers to invite me here. Secondly, a small disclaimer. What I speak is my personal opinion as a proud Indian and who's working in the field of InfoSec and some of the boundaries of the finance and InfoSec. Starting with the ones who are looking at the $5 trillion economy, as the proud Prime Minister has said that someday we should be having it in the near future. What matters most is the mobility of the money. Old ancient wisdom, which a small trader to a big businessman understands, you have to rotate the money. Once you have to rotate it, you have to rotate it fast. It has to generate value in every cycle. The more value you generate, the economy is not a zero-sum game. The more value you generate, more services you generate wealth. So if you have to move fast, the ecosystem which fuels this, which propels this, which accelerates this overall, our basic tenets of the Indian economy is the banking sector. How do you move the money? The money only moves once it moves from one person to other, one bank to other. Now, once you look at the technologies which are going to support this. So first is the backend technologies, infrastructure technologies on which the banks are dependent. Second is the technologies which a user, once he is interfacing with the banks or the financial systems, he gets an interface to them. And third is, when all this ecosystem is coming up, is your security and is your privacy concerns along with that. Because security and privacy both are very, very kind of interlinked together. The inclusion, can it happen? The inclusion, yes, we have started the Jan Dhan Yojana or the giving a digital identity to our people through Aadhaar, through which they can validate and get enrolled or get onboarded to the digital ecosystem. It is provided as an impetus. But is it going to scale forward further? The challenge with us is to have a very, very robust backend system. The cloud technology is what is there. But we have to be very careful. The security brings in the challenge of separation of the data which is there, which is required to ensure privacy. The Gen AI technology and the pre-Gen AI technology, the machine learning models, or the AI technology, it has evolved over a bit, but I see a clear distinction between the machine learning models or the AI technology, pre-Gen AI and post-Gen AI. And there is a reason for it. The primary reason is the previous models, say a chatbot based on previous technology, or a recommender model, or a credit assessment model for a person, those models were trained on machine learning data, but when the models were made, they were abstracted to the numbers. They didn't contain the private information. They didn't have the retention capability. Deploying those models were not too much of a threat. But what happens with the Gen AI, which is being adopted very, very fast? We have to be cautious on that. Gen AI models have a retention capability. If you train it with your user data, it remembers that. The way we are looking at the cyber security, there is another field which is emerging, which is called GenAI security. Since this data is not forgotten by the GenAI systems, the challenge is to protect them, and the people should not be able to extract. That is where the prompt engineering or the prompt attack on the GenAI models are happening. So if you train it with the data, certain people can extract some information of it. Those are the few boundary lines which are the challenges which are required to be addressed if you want to move forward into that domain. Thank you.
Sure. So let's continue with the discussion on Gen AI. And in Gen AI, the usage of Gen AI in mutual fund space, right? Everyone of us here have heard mutual fund sahi hai, right? A great campaign by Amphi. We have Sachin Tendulkar, we have Dhoni, and now we have also roped in Rohit Sharma, the recent ads, right? So if you look at the Indian mutual funds AUM, it has increased drastically in the last 5 years, from 2,500,000 crore to 5,800,000 crores in 2024. So how AI and ML technologies, Mr. Vamsi, can be leveraged to improve the management of mutual funds in India, and what are the ethical considerations to be considered in implementing these AI and ML technologies?
Sure. Audible, right? Once again, I think the same disclaimer goes. Anything that I speak here, my personal views, nothing to do with Axis Asset Management, or for that matter, any other organization that I have represented in my past. We'll get to AI/ML, but I am just coming fresh off a WhatsApp conversation from a large group, a lot of CTOs, CDOs in that group. Have we ever wondered why do we get a call for a credit card from the same organization, same bank that we already have a credit card with? It's one of the most irritating things, isn't it? Now let's look at the case of an airline ticket. You bought an airline ticket, cancel, you want to do something else. You explained it. Unfortunate for you, the phone call got disconnected. You call again, you need to explain it one more time. Isn't that one of the most basic expectations out of a CRM system? I think we've got problem with basics. AI/ML, sophisticated machine learning models, all good. But I think if you don't have the basics right, I think you're not going to get anywhere with all this niche tech that the plethora of organizations have got to offer. I think it's all about getting the basics right. Now let's rewind back to the first problem statement. The problem about the same person who has the credit card from, let's say, XYZ bank, the same bank calls. Of course, we'll give some benefit of doubt that it's an agent call and not really the bank personal calling. But still, why? Why am I getting this call from the same bank from which I have a credit card, or I have a loan already? Why are they asking if I want the same loan again? It's because there's no dedupe. As simple as that, right? Dedupe is one of the most fundamental pieces of getting data right. I think if we can fix these basics, then we have got a leveling up. Now let's come to mutual funds. Mutual funds, I think there are multiple opportunities in expanding that to a citizen scale, population scale. Today it's private too, as the keynote speaker we had today, has rightly put it. Even today we have penetration only at a tier 1 level. So why are we so far away from financial inclusion? When you have an opportunity to scale it to 1.5 billion, let's exclude the minors and the senior citizens, we still have a sizable population. Let's take 50% of that, 40% of that. We are nowhere close to that. I think what is stopping us from getting there is, getting these products to the right platforms. In our own case, let's look at the example. We said, what do we do with your phone? You look into it. There are enough studies that indicate that every 7 minutes you're going to look into it. If it's there, lying there, I'm going to look into it in the next 7 minutes. And what do I do first as I pick up my phone? One of the first things I'll do is to open WhatsApp. If that is where you're present, I think you are able to engage your audience that much more better. So that has been one attempt for us. We tried to get to WhatsApp, and then we tried to get as vernacular as possible, because, we don't necessarily have English-speaking population all over the country, because the idea is to get to Bharat scale, So that was one opportunity. We experimented with a couple of languages. Now there are many more languages. And therefore, that's one experiment that's faring pretty well for us. The second is, extending somebody's investment in mutual funds to offer parallel products. I think, that was also one of the case studies that we have evaluated as part of this. That's a very interesting case because, financial inclusion not limited to mutual funds, but if you look at credit inclusion, I think that's a very interesting space. You got large, interestingly for us, this is a data dream, right? Data likes with just two RTAs. There are just two RTAs in the country, and pretty much all of mutual fund data is with one or other of the two RTAs. And therefore, their ability to extend trade products, etc. I think that also augurs very well. So I think this is a sunrise. I mean, at the cost of boredom, I have repeated this in multiple forums. But I think this is a sunrise industry, offers opportunities to extend financial inclusion, not just in investment space, but also in other products, basis your investments. Thank you.
Right. So key takeaway, engagement, the first 7 minutes, financial inclusion, engagement.
Yeah.
So taking this, the key takeaway from Mr. Vamsi, coming to Mr. Kailash, India has approx 6.3 crore MSMEs, and they contribute to 30% of India's GDP. However, only 11% of MSMEs have access to credit, right? So how can we leverage the emerging technologies to increase the credit penetration in MSME sector? And how do we engage them in a better way and have onboarding, quite seamlessly for them?
Thanks. Good afternoon, everyone, and thanks to Bankers Frontier for having me here. Correctly said by you that India have almost 6.3 crore MSMEs as far 2015-16 record. Today, Udyam is important, mandatory for the MSMEs. More than 4.5 crore MSMEs are registered on Udyam, and they are creating around 18 crore plus job. One of the biggest issue MSME sector is facing is the liquidity. And correctly said by you, 11% only get a formal channel of financing as far as this is concerned. Now, the technology or I'll say digital initiative plays a very important role into that. Considering the India is, I think, much ahead in the curve as far as the digital financing is concerned. And coming back with AI and ML kind of thing, which will bring more, I'll say reduce the TAT and bring more operational efficiencies with respect to credit assessment and also one kind of a transaction monitoring kind of thing. So technologies bring not only the traditional way of I'll say they eliminate. I'll not say completely eliminate, but up to some extent they eliminate the traditional way of assessing the creditworthiness of the particular MSME, but also bring the data into the system. With AI and ML, the creditworthiness from their bank statement, their GST analysis, their financial analysis will bring the immediate decision making or underwriting for the financials. Second part is that the monitoring piece also through AI and ML technology. Today the monitoring, the fraud detections, the predictions that also the technology can give a better edge as far as the financing need of the MSME is concerned. Today, if I'm just giving an example of trade receivable discounting system, based on the strength of the buyer, through the technology, the MSMEs are getting fund without assessing the normal traditional way of MSME financials, correct? So this is how the technologies brings the more, I'll say, ready-made informations, and as well as, I'll say, more monitoring purpose also. One of the biggest concern of the financer is that how we can monitor the whatever loans they had given it to a particular client, especially MSME sector where they don't have all the information available. With coming the technologies, AI, ML, or big data kind of thing, which will give a ready-made information to the financer to take a decision and also to monitor the portfolio what they had financed. Thanks.
Yeah, thank you for that. So taking the conversation ahead, Mr. Subrata Das, everyone knows about Open Credit Enablement Network. It's a great initiative. So where are we on the adoption of OCEN, and what is the future of OCEN in terms of MSME financing, maybe for a small ticket size loans?
Thank you. Great question. Firstly, glad to be here, and thanks to Banking Frontiers for the opportunity. I think I'll just start by explaining one of the key challenges in MSME credit. and why we have, historically, we have not seen enough penetration. We say that 11% is under the fold of formal credit. The biggest challenge here is lack of formal income documentation, coupled with the fact that the heterogeneity in this sector is tremendous. So when we're looking at a salaried guy, the assessment is straightforward. You know, there's a salary that comes on X date, then there's the stipulated expenses continuing through the month, and at the end of the month, you have savings. You can assess this and understand how much loan can be given. But for an SME, just imagine the vast multitude of sectors and subsectors and classifications. So a small MSME manufacturing metallic items like nuts and bolts versus a distributor of pharmaceutical equipments versus a radiology laboratory. And there are so many of them. Each and every one of these are very different from each other. The factors which determine a well-performing business versus an average business versus a struggling business are also very different, because their business cycles, their relationships with their buyers, the cycles of payment coming back. These are very, very different, and it requires very, very detailed, minute trend and pattern identification so that you can assess these businesses properly. And that is very key to designing credit solutions. If we do not have this, then we cannot increase the penetration of credit, which has been the challenge theoretically. But luckily now, with advent of alternate data, we are now moving from the traditional and sometimes collateral-based lending to what we call cash flow-based lending, where you can see the business flows of the MSME, and you are able to take a position, or you are comfortable enough to lend money to that business, which is where I think Oken comes in. And today we have a revolutionary technology such as Oken, where vast number of MSMEs in the respective ecosystems, they are connected to lenders on the other side through a bridge. This mechanism makes it possible. This is the mechanism of scale. And coupled with the intelligence driven by data, you are able to form cash flow-based lending programs. This is the only way, perhaps, in which we will give scale to MSME lending. And if India has to become 5 trillion economy, MSME being 30% of it, then we need that much growth in MSMEs. And this is the only way it will come. So I think absolutely no doubt that this will explode, in the days to come.
Alternate data, a cash flow-based lending. Right. So going from the visible part of the tech, right, the AI, ML, account aggregator, going to the non-visible part of tech, that is blockchain, right? So where are we with respect to blockchain adoption in India? And do you see any barriers? And how can we overcome these barriers in terms of adoption rate?
So I think blockchain, there is a common term for it. People say it is a solution looking for a problem. So the origination of blockchain was because of unprecedented US dollar printing in the 2008 crisis. But after that, the reason it has not picked up is primarily because everything that you can do with blockchain can be done in a centralized system also. So I think the whole DeFi Web 3.0 is what could take blockchain potentially further. And if done the right way, it has the potential to revolutionize the whole inter-system, inter-bank, inter-country payment, the way Amul has done for cooperatives, for milk farmers. So I think some of the cases where blockchain really thrives is when there's a zero trust-based system. For example, there are multiple families who are kind of inheriting very large fortune from their grandparents. So in that case, no one trusts each other. In that case, it makes sense to have a copy of the will with each other, to approve a transaction or sale, or maybe some collectibles is, the person has, you want to sell it, you need approvals from all of them, and they don't trust each other. So I think blockchain is a good use case for that. Again, between banks, between brokers, between depositories, if there are certain common activities which everyone does, like risk management, like you are taking approvals for the board meetings, general meetings, you are having agendas. So that is something everyone does. Maybe 10% difference is there. So in that case, I think blockchain is a good platform where most of the common stuff can be aggregated and put on a common platform, and then everyone will have just a flavored version on top of that.
Right. Thank you for your thoughts, sir. Moving the blockchain discussion ahead, Mr. Deepak. There's emergence of fintechs globally, especially on cross-border transactions. So how do you see, which technology has the potential to impact the trade finance landscape in India and globally?
Thanks, Kinjal. So when I see this trade finance space, so roughly around 24-25% of global trade is the part of all global GDP. And as per the estimate recently was published by ADB. So there is a dearth of 2.1 trillion of financing gap when it comes to global trade. So why there is a gap between the two, and how or which technologies can help to bridge this gap? So there are two, three things I would like to emphasize. Of course, being from Export Financing Institute, I can speak for hours on this. So when we see this trade finance or the issues which are there, so it starts right from when you get an order from overseas buyer. So there is a I would say lack of transparency is there between the two. Your buyer is sitting in some other country and you are in some other country. Language barrier is there. A lot of trust issues are there. So there the your letter of credit or your insurance and all those components come. But when you get into those things, your cost gets increased, and then ultimately there is risk of getting I would say, not very productive in terms of financing. So there I believe the time has come for global credit information bureaus. So like in India, we have now why this credit is picking up, because credit bureaus have information about both buyers and sellers. But in case of international, there is an issue. Language is another issue which is there. So there Gen AI, I believe, can help to bridge that gap. The third area where I believe to issue this transparency issue can be handled is through blockchain, of course, as very well explained by Kinjal also. So unless you have interconnected system, so transparency is difficult to handle. The second leg comes is the speed. The speed of, I would say, at which the document moves between the buyer and the seller or the funding bank or the issuing bank is terribly low. Because of that, your funding cost gets increased. So there again, one thing is your API-based interconnected systems, your blockchain can help. The moment that bill of lading is being is with the exporter, it should go to their bank. And the third, of course, is the cost of payment, which is currently very high. If we see, and the time also it takes is very high. So there, I believe now rupee is going globally. So that will help to bring down that cost. And there, in that space, I believe this blockchain-based or the cryptocurrencies can also help to bridge that gap. So in fact, now SWIFT has also partnered with one cryptocurrency. I believe this is chain-based. His name is there. Ripple was there. So I think if we are able to address these three areas, one is your transparency, your speed, and the cost of remittance. So I think in all these three areas, these technologies can help to bridge the gap which is there in international trade finance.
Transparency, speed, and agility, right? So coming to the speed, there are various no-code platforms available in the market which empowers the business users to create a technology solution without actually depending on the developers, right? So what is the future of these no-code platforms, and how do you ensure that these no-code platforms adhere to the organization's IT governance and security policies?
Great question. So, no-code platform has really changed and transformed the way the applications are getting developed nowadays. And also that has really speeded up the digital transformation journey, the time to market for the business as well. But while we are all doing all this, it's a new platform which is really there into the ecosystem. While we have seen hyperscalers, cloud, and many modernization, agile development, but this is something which is, we are democratizing the technology in the hands of the business users. So for which they need to be appropriately trained, first of all, in terms of using those platforms. And you need to have a right governance in place. One is from a technology governance, and also you need to ensure the information security practices measures are also been equally captured very well, because it is very important to have a secure development and also to follow with the new upcoming DPTP as well, the data privacy regulations as well. So while you're doing this development, so it has really helped because we are also seeing some open source libraries, what we were discussing in terms of those are also getting adopted, included into the, and also the configurations coming in. So I think it is very more important that the security assessments is done right in the early stage. while these have been right now been used more from a low complexity or a medium complexity applications from a configuration and a workflow management, but it is very important now in terms of while it is getting adopted in the, and largely it is also because of utilization of the very highly bandwidth of the tech engineering, which is the most expensive bandwidth in any organization, I think, but it is actually reducing their bandwidth, and which the business users are taking over. I think the security practices, controls, the policies has to be rightly set out there.
Right. I know we are, the display is showing time's up. One last question to everyone. If you want to double down and name one technology that you think will have a significant impact on the future of finance, just in one word, sir, Mr. Kiran.
Blockchain.
Blockchain. Mr. Deepak.
Blockchain.
AI. Mr. Kapil.
Agent AI.
I'll choose ML. ML.
Oh, sure. Mr. Subrata Das, one technology that you would want to name?
I would say AI ML.
I think it's AI and ML both.
So 5:2, AI 5 and blockchain 2. Thank you very much.